Welcome to Hibiscus Petroleum's Financial Results Webcast. This webcast presents an overview of the results reported as part of our quarterly financial report for the 3-month period ended 30th September 2018 and released earlier today. This webcast has been prepared by Hibiscus Petroleum Berhad, i.e. the company, solely for general information purposes only and shall at all times be heard and or viewed together with the full quarterly report for the same period that is made available or published by the company on its website. This webcast may contain forward-looking statements which are based on current expectations, beliefs, and projections about future events or matters. By listening to and or viewing the webcast, you agree to the limitations and notifications set out in the disclaimer section of this webcast. Our presentation today comprises of 6 components. In Part 1, Uday Jayaram, our Vice President of Corporate Development, will briefly introduce the company. In Part 2, Deepak Thakur, our UK JV Asset Manager and Group Petroleum Economist, will provide an overview and update on developments at our UK producing asset, the Anasuya Cluster. Deepak will also provide an overview of the recently acquired discovered oil fields offshore in the UK continental shelf in Part 3. In Part 4, Dr. Pascal Hoss, a co-founder of Hibiscus Petroleum Berhad and CEO of Sea Hibiscus Sendirian Berhad, will provide an overview of our North Sabah Malaysian producing asset. In Part 5, Yip Chi Yong, or CY, Vice President of Finance and Group Controller, will present the financial highlights of the company's first quarter results. Mark Payton, our Chief Operating Officer, will then conclude our presentation with some of our key messages for this quarter in Part 6. Should you have any queries, you may contact our Investor Relations team via the email address provided at the end of this presentation. I shall now hand over to Uday.
Hello, this is Uday Jayaram. I am Vice President of Corporate Development at Hibiscus Petroleum Berhad. Let me commence this presentation by providing you with a brief introduction to our company. Hibiscus Petroleum was listed on the main market of Bursa Malaysia in July 2011. Our vision is to be a respected and valuable, pure-play, independent oil and gas exploration and production company. Our mission is to secure 100 million barrels of net proven and probable, or 2P, oil reserves and/or entitlement from currently held assets or potential new ventures located in areas of our geographic focus by 2021. We are also aiming to achieve net oil production of about 20,000 barrels of oil per day. On the 23rd of November 2018, our market capitalization was 1.6 billion ringgit. We have approximately 1.6 billion shares in issue, which are held by more than 12,000 shareholders. Our listed equities are Sharia compliant at this time, and it's been reported that effective 30th November 2018, Hibiscus Petroleum will be included in the MSCI Global Small Cap Index. Our core management team own the largest block of shares in the company, with a 10.6% holding. Corporate and institutional shareholders approximately hold a combined 52.1% in the company, while retail shareholders provide liquidity with around 37.3% ownership. Today, our key activities are focused on efficiently monetizing our producing oil fields and growing our portfolio of development and production assets in areas of our geographical focus, which are the United Kingdom, Malaysia, and Australia. The company currently has 2 producing assets, the first being the Anasuya Cluster of oil and gas fields located in the UK North Sea, which we acquired about 2.5 years ago. Since our acquisition of this asset, it has generated significant positive cash flow and profits for us. Through our joint operatorship in Anasuya, the company is also gaining valuable operating experience in the UK. From Anasuya, we produced an average of approximately 3,600 barrels of oil equivalent per day net to our company over the financial quarter ended 30th of September 2018. In addition to Anasuya, on 31st March 2018, we became the operator of the 2011 North Sabah Enhanced Oil Recovery Production Sharing Contract, or PSC. We have a 50% participating interest in this PSC, with the remaining 50% non-operated participating interest being held by Petronas Charigali, a wholly owned subsidiary of Petroleum Nasional Berhad or Petronas, the national oil company of Malaysia. For our 50% participating interest in the North Sabah PSC, our estimated entitlement of daily oil production over the period 1st July 2018 to 30th September 2018 was approximately 4,800 barrels of oil per day. Financially, our balance sheet is also strengthening. As of 30th September 2018, our net assets stood at 1.1 billion ringgit, and our unrestricted cash balance stood at 288 million ringgit. We also continue to operate without any debt. Our current portfolio, consisting of 1 exploration, 2 development, and 2 producing assets, is spread across 3 continents. In Asia, we operate in Malaysia, and in Oceania, we operate in Australia. In Europe, we jointly operate several fields in the Anasuya Cluster and soon aim to be appointed the operator of Blocks 15/13A and 15/13B. All these assets are located in the United Kingdom and are held via concession agreements. Today, our company holds a 50% interest in the Teal, Teal South, Guillemot R, and Kite fields of the Anasuya Cluster, which we jointly operate with our partners Petroleum. Our company also holds a 19.3% interest in a 5th field called Cook. The Cook field, which is also part of the Anasuya Cluster, is operated by Ithaca Energy. The producing fields of the Anasuya Cluster, which are Teal, Teal South, Guillemot R, and Cook, produce to the Anasuya Floating Production, Storage and Offtake Facility, more commonly known as an FPSO. Kite has been a discovered field but is not yet in production. At the Anasuya Cluster, our total proven and probable or 2P oil reserves as of 1st July 2018 was independently assessed to be 24.4 million barrels of oil net to our company. In Malaysia, we concluded the acquisition of a 50% interest in the North Sabah PSC at the end of March 2018. The North Sabah PSC covers interest in 4 producing fields, which together contain proved and probable or 2P reserves of 15.1 million barrels of oil net to the company. In Australia, under a concession type agreement, we have approximately 6.5 million barrels of 2P reserves located in the Vic L31 West Seahorse development asset. The potential of each of our assets is further underpinned by volumes of oil which have been classified as contingent resources. The total contingent resources within the Anasuya Cluster, North Sabah PSC and the West Seahorse field is 38.5 million barrels of oil. In addition, in October 2018, we acquired a 50% interest in Blocks 15/13A and 15/13B, consisting of 2 discovered oil fields located offshore in the United Kingdom. These 2 discovered oil fields contain 30 million barrels of 2C contingent resources net to the company. Therefore, in aggregate, we currently have total net 2C contingent resources of 68.5 million barrels. In the months and years going forward, we intend to gradually convert these contingent resources into proved and probable reserves, thereby further enhancing the value of our asset base. Deepak will now take you through the details of our assets in the United Kingdom in parts 2 and 3 of this webcast.
Hello, I am Deepak Thakur. At Hibiscus Petroleum Berhad, I have 2 roles. I am the JV Asset Manager for the Anasuya Cluster. In addition, I am also the Group Petroleum Economist. I will now take you through some information on our first producing asset, the Anasuya Cluster, which is located offshore the United Kingdom. Our indirect wholly owned subsidiary, Anasuya Hibiscus UK Limited or AHUK, has been involved in the joint operations of the Anasuya asset for over 2 years. This asset is located about 175 kilometers east of Aberdeen in 94 meters of water and has been producing since 1996. Based on an independent reserves assessment and the assumptions contained therein, effective 1st July 2018, the estimated remaining economic life of the asset has now been extended from 2035 to 2038. As previously mentioned by Uday, our interest in the Anasuya cluster comprises a 50% direct interest in the Teal, Teal South, Guillemot A and Kite fields. We jointly operate these fields together with our partner Petroleum through a jointly owned legal entity incorporated in the United Kingdom called the Anasuya Operating Company. We generally refer to the Anasuya Operating Company as AOC. The cluster also includes the Cook field, and in this field we have a non-operated 19.3% interest. We also own a 50% direct interest in the Anasuya FPSO. Included as part of Anasuya Cluster are all components of the installed subsea production infrastructure and the Anasuya FPSO. Taking a closer look at the field layout, the subsea infrastructure underpinning the production of hydrocarbons is quite extensive and spans 25 kilometers from north to south. We utilize the services of Petrofac, a reputable international service provider, in the role of duty holder for the offshore facilities and pipelines. Since February 2018, AOC has become the designated operator of the offshore wells. Our joint operatorship of the Anasuya FPSO and the management of operating costs through a risk-reward type arrangement with Petrofac are key drivers in keeping our unit production cost at competitive levels for this type of facility. Over the past 2 years, it has been the practice for us to conduct at least one offtake of oil in each financial quarter from Anasuya. In the quarter ending 30th of June 2018, we varied this practice. Instead of arranging for a lift of oil by 30th of June 2018, we chose to conduct a cargo offtake on the 2nd of July. This was done to ensure safe and smooth running of operations as we were concurrently conducting critical activities on the Gilmo P2 sidetrack that was being drilled nearby on the Gilmo field. As a result of this deferment, we successfully conducted 2 lifts in the current quarter, and a total of approximately 524,000 barrels of oil net to the company was sold. The weighted average realized price for the 2 offtakes was $73.88 per barrel, the highest achieved in Anasuya since we acquired this asset over 2 years ago. Operationally, the average uptime and daily oil production rate achieved in the current quarter was 88% and 3,581 barrels of oil equivalent per day, respectively. There was some minor planned shutdown to facilitate operations related to the drilling, testing, and hookup of the Gilmo P2 sidetrack well, and given these events, we are satisfied at having maintained key performance indicators or KPIs at these levels for the current quarter. We are also pleased that as a result of our continued management of costs, the average OPEX per barrel of oil equivalent that was produced during the current quarter has decreased to just under $16 per barrel. In summary, operating performance for this quarter is generally consistent when compared to the previous quarter, as there were no major planned or unplanned events which affected production. Over the past few months, our operations team has focused on safely drilling the Gilmo P2 sidetrack well and subsequently monitoring the well to assess performance. Generally, we are pleased with the production performance. The program to drill the sidetrack well commenced operations on the 4th of June 2018, and on 3rd of September 2018 we announced that well program had completed. During the cleanup and flowback phase, the well achieved a stabilized production flow rate of 2,375 barrels of oil per day net to Hibiscus Petroleum. The stabilized flow rate was established during a 20-hour flow period through a 32% choke and with the application of gas lift at 1.7 million standard cubic feet per day. At this time, the well is in production and contributing positively to daily production rates as shown in the chart. The actual oil production flow rate from Anasuya net to the company has increased from a base of approximately 3,000 barrels of oil per day recorded in August 2018, that is prior to Gilmo P2 sidetrack well being completed. Since September 2018, post completion and hookup of the well, actual oil production rate from Anasuya net to the company is currently circa 4,000 barrels of oil per day. The estimated ultimate recovery attributable to this well is approximately 0.75 million barrels net to the company. Of this amount, almost 100,000 barrels have been already produced during the period from mid-September to the end of October 2018. We are pleased that the well is currently flowing naturally without the need for gas injection to artificially lift production from this well. We are currently not producing at its maximum rate to prevent the effect of early water conning, but overall, this well is expected to contribute positively to the company in the coming quarters. Earlier this year, we approved an investment to undertake the Cook water injection project. This project entails the drilling of a well through which water will be injected to repressurize the Cook field. We expect this secondary recovery activity to arrest the natural decline of the Cook well with the added achievement of delivering an improved recovery factor for the field. Engineering, planning, and procurement activities related to this project have commenced, with field activities being implemented by our operating partner in Cook field, Ithaca Energy, over the course of 2019 calendar year. Our capital commitment for this project is expected to be approximately 61.6 million ringgit, which is to be funded from internally generated funds. As previously disclosed, the drilling of Gilmo P2 sidetrack, amongst other projects which have been identified on this slide, have the common objective of taking us towards the target of delivering an average of 5,000 barrels per day net to Hibiscus Petroleum by the end of 2020 financial year. I will now briefly take you through our recently acquired interest in the Block 1513A and 1513B development asset, also located in the United Kingdom. On 9th of October 2018, we announced that our indirect wholly owned subsidiary, Anasuya Hibiscus UK, had entered into a sale and purchase agreement with Caldera Petroleum Limited to acquire a 50% interest in blocks 1513A and 1513B for a total purchase consideration of $37.5 million. The blocks are located offshore in the UK sector of the North Sea, approximately 250 km northeast of Aberdeen, in 140 meters water depth. Block 1513A consists of a significant oil-bearing discovered field, while Block 1513B, which lies northeast of Block 1513A, consists of a smaller discovered field. Based on an independent report by AGR Tracks International Limited, the gross 2C contingent oil resources in the blocks are estimated to be 60 million barrel of oil. As we have 50% interest in the blocks, this translates to 30 million barrel of 2C contingent oil resources net to Hibiscus Petroleum. On 16th of October 2018, subsequent to receiving all material regulatory approvals, this transaction was completed. This acquisition is an opportunity for Hibiscus Petroleum to expand our footprint in an area of our geographic interest and is consistent with our 2021 mission. Given that production from Anasuya Cluster generates taxable profits, we believe that the development of these newly acquired fields may provide us with an opportunity to optimize our tax position whilst also accreting value to our stakeholders through the addition of production. Furthermore, we have identified several standard discoveries around Block 1513A and 1513B. We believe that potential collaboration with concession owners of standard discoveries located around these blocks is feasible and will allow a reduction in overall unit development cost for all parties. Having conducted some benchmarking exercises, we believe that the acquisition cost per discovered barrel of oil is very attractive, and we anticipate that the value added to our portfolio through this transaction will gradually grow as we mature the field development plan. I will now hand you over to Pascal to provide a business overview of our Malaysian North Sabah operations.
Hello, I am Pascal Hos. I'm a co-founder of Hibiscus Petroleum Berhad, and I'm also the CEO of Sea Hibiscus Sendiri in Berhad. Sea Hibiscus Sendiri in Berhad is the holder of a 50% participating interest in the 2011 North Sabah Enhanced Oil Recovery Production Sharing Contract, or PSC. We are also operator of this PSC. The remaining 50% participating interest is held by Petronas Carigali Sendiri in Berhad. This is our first PSC in Malaysia, and participating interest in this PSC was acquired through a transaction with the Shell Group that was successfully completed on the 31st of March 2018. The North Sabah PSC has delivered production since 1979, and our production rights under the PSC continue until 2040. Through the PSC and the joint operating agreement signed with our partner, Petronas Carigali, we have a 50% participating interest and operatorship of 4 producing oil fields offshore Sabah, Malaysia, namely St. Joseph, South Furious, SF30, and Barton. We also have the operatorship of the Labuan Crude Oil Terminal and all other equipment and assets related to the PSC. As reported in the Petronas Annual Review of Petroleum Resources, The net proven and probable oil reserves of the fields covered by this PSC is 15.1 million barrels as of 1st January 2018 through to the end of the PSC life in 2040. Our independent valuation, performed by Risk Operations Private Limited, estimates our net entitlement of 2C contingent oil resources in the fields covered by this PSC to be 29.2 million barrels. Consequently, we believe this asset holds a great deal of future potential. Subject to oil price and regulatory approvals, we hope to be able to allocate capital and our technical capabilities towards unlocking the available proven and probable contingent resources. The table on this slide shows the operational performance of the North Sabah asset over the past 4 quarters. That is from the 1st of October 2017 to the 30th of September 2018. To note, between the 1st of October 2017 and the 31st of March 2018, Shell was operating the North Sabah asset on behalf of CI Hibiscus. The average uptime in the current quarter of 93% is marginally lower than the uptime achieved in the previous quarter, consequently resulting in a decrease in the average daily oil production rate. We conducted 2 oil offtakes from the North Sabah asset, with a total of approximately 595,000 barrels of oil being sold in the current quarter. The weighted average realized oil price for these 2 oil cargoes was $78.55 per barrel. OPEX per barrel in North Sabah saw an increase of approximately 42% to $11.54 per barrel, which was mainly due to the ramp-up in plant maintenance activities towards the end of the current quarter. We expect that the OPEX per barrel will further increase in the next financial quarter as the plant maintenance campaign gains momentum before its completion towards the end of 2018. In August 2018, Petronas approved the St. Joseph infill drilling project through the Milestone Review 4 maturation process. As part of the project maturation process, we will be following through with the submission of a field development plan in November 2018. This project entails the drilling of 3 infill producer wells utilizing a triple splitter wellhead from the St. Joseph Jacket A platform. There will also be a requirement for minimal topside facilities modification. From an estimated ultimate recovery of 2.8 million stock tank barrels, this project is expected to add approximately 2,600 barrels of oil per day, gross, at its peak production. The total gross capital committed to this project is anticipated to be approximately 142.5 million ringgit. This will be shared equally with our joint venture partner. We anticipate that drilling will commence in April 2019, and we are targeting for first oil production in June 2019. Finally, we are also working towards obtaining Petronas approval for the SF30 infill drilling project. This project will approach the Milestone Review 4 stage in the next financial quarter. These projects are consistent with the group's strategy to convert contingent resources within the North Sabah asset into producible reserves, thus unlocking economic value from these fields. I will now pass you on to CY, who will take you through the financials of the group for the current quarter.
Hi, I'm CY, Vice President of Finance and Group Controller, and I will take you through the financial highlights for the current quarter. The current quarter represents the second quarter that actual North Sabah business performance data under the operatorship of CI Hibiscus is being reported for detailed analysis. Earnings before interest, taxes, depreciation and amortization, or EBITDA, for the North Sabah asset is reported at approximately 101 million ringgit for the current quarter. The EBITDA margin for the current quarter increased to 52.5% from 45.5% in the previous quarter, after excluding the one-off impact of 93.8 million ringgit negative goodwill recorded in the previous quarter. This increase was mainly driven by higher average realized oil price and the normalization of inventory valuation in the current quarter. Tax associated with North Sabah in the current quarter amounted to approximately 31 million ringgit. This was largely due to taxes levied on profits generated from operations, partly offset by a reversal of deferred tax liabilities, resulting in a profit after tax for the North Sabah segment of 45 million ringgit. Turning to the Anasuya segment, as reported before, the crude oil offtake originally planned to take place in the previous quarter was deferred to the current quarter to enable the conduct of smooth drilling-related operations at the Gilmore P2 well. That resulted in an additional offtake realized in the current quarter. In the light of this additional offtake in the current quarter, EBITDA attributable to Anasuya was approximately 114 million ringgit, driven by the sale of approximately 524,000 barrels of crude oil. For the current quarter, Anasuya attracted a relatively high net tax expense of approximately 34 million ringgit. This is mainly due to higher deferred tax liabilities recognized, which amounted to 26.2 million ringgit. Such deferred tax liabilities arose largely from drilling-related capital expenditure of 65.4 million ringgit. We wish to emphasize that in the United Kingdom, when there is high expenditure in relation to capital projects, deferred tax charge, which is non-cash, will be relatively high. However, UK tax regulations grant us immediate income tax relief equivalent to the total capital expenditure against taxable income. For the current quarter, profit after tax delivered by the Anasuya segment amounted to approximately 61 million ringgit from the sale of 2 offtakes. Whilst profits are extremely important, management's focus remains on delivering strong and sustainable EBITDA levels as long-term business continuity is of the highest priority. Our business performance is underpinned by several factors, predominantly the price of the Brent crude oil benchmark at approximately the time of a scheduled offtake from our crude oil storage facilities. Given that oil price is affected by global macroeconomic factors which are not within the control of the company, focus is placed on the operational performance of the assets, such as production rates and facilities availability, as well as the management of operational expenses. A key metric that we utilize to track our operational performance is average unit production cost. The average unit production cost for both the Anasuya Cluster and the North Sabah PSC are well below the average realized oil price achieved in the respective quarters. As shown in slide 20, we have seen oil prices much lower than current oil price levels, and we have managed, on those occasions, to remain profitable. The careful management of costs to maintain low operational expenditure and the delivery of production enhancement projects are key towards obtaining low unit production costs. We wish to reiterate that management's focus remains on delivering strong and sustainable EBITDA levels as long-term business continuity is of the highest priority. The group operates 2 producing assets in 2 countries. The tax structure in the oil and gas exploration and production sector for each of these countries differ. In Malaysia, the tax regime under which Malaysian oil and gas activities are governed is the Petroleum Income Tax Act 1967, also known as PITA. The provisions of PITA are applied to net taxable petroleum income at the rate of 38%. In the UK, the total tax rate for AH-UK is 40%, which consists of ring-fence corporation tax and a supplementary charge at 30% and 10% respectively. Any capital expenditure in the UK is fully deductible from both taxes in the same financial year that they have been incurred, leading to a reduced amount of tax payable for that year. Simultaneously, deferred tax liabilities, which are treated as an expense to the profit and loss account, are recognized in the same financial year. Such deferred tax liabilities are non-cash in nature. To reiterate, in the UK, capital expenditure incurred in the financial year provides the benefit of immediately reducing tax payable within that same financial year. The capital expenditure is also expected to lead to production enhancement in future years. Over the past few quarters, our balance sheet has been gradually strengthening, more so with the introduction of the North Sabah asset as part of the group's overall business portfolio. We have built our total assets to approximately 2.2 billion ringgit, and shareholders' funds stand at about 1.1 billion ringgit, each representing an increase of 12% respectively from the previous quarter. Year on year, total assets have increased by 72%, and shareholders' funds have increased by 45%. Net assets per share currently stand at 70 cents. In addition, as at 30th September 2018, the group's unrestricted cash balance is at a healthy 288 million ringgit. The increase in the cash balances is due to proceeds from 4 offtakes received in the current quarter. The restricted cash recorded in our results relate to a security for our portion of the estimated cost of decommissioning the facilities of the Anasuya Cluster, In this regard, we are required to periodically place monies into a trust, and this commenced 18 months after the completion date of the Anasuya Cluster acquisition. This activity will continue until such time that the security has been fully provided. As of 30th September 2018, a total sum of 14.1 million ringgit has been deposited with a UK trustee to support our ongoing obligations in this area. Whilst the group has remained debt-free, we anticipate that we shall put in place a certain quantum of debt facilities to ensure that production enhancement projects and opportunities we have in hand may be executed smoothly. Subject to being successful in establishing such debt facilities, our intention is to limit borrowings to a conservative level of gearing. Before we wrap up, I would like to hand over to our Chief Operating Officer, Mark Payton, to highlight a few takeaway points.
Hello, I'm Mark Payton, and I'm the Chief Operating Officer of the Hibiscus Petroleum Group. I would like to close this presentation with some key messages. Several milestones have been achieved by the group in the financial quarter ended the 30th of September 2018. At the group level, we continue to focus on delivering results for the current financial year ending 30th of June 2019 or financial year 2019. Our goal is to deliver 2.7 to 3 million barrels of oil from our two producing assets in the financial year 2019. In the current quarter, that is the first quarter of the financial year 2019, we sold 1.1 million barrels of crude oil across both assets, with two offtakes coming from Anasuya and a further two offtakes originating from North Sabah. We also aim to ensure that unit production costs in Anasuya and North Sabah continue to be at levels that allow a continued healthy EBITDA, despite recent oil price volatilities. At Anasuya, we completed the Guillemot P2 sidetrack project, resulting in an overall enhanced production rate from this asset. Similarly, the Cook Water Injection project, which was sanctioned earlier this year, is on track for execution in 2019. In North Sabah, we have commenced a planned maintenance program, which is expected to be completed in the next financial quarter. Technical work that was conducted on the development projects has delivered positive results, as the St. Joseph infill drilling project was approved by Petronas at the milestone review, or MR4 stage. Work is also ongoing to obtain Petronas MR4 approval for the SF30 infill drilling project. We anticipate the gap towards achieving our 2021 mission will be closed by developing identified opportunities which are being progressed within the assets that are in our portfolio. Additionally, we have recently acquired a development asset consisting of two discovered oil fields offshore the United Kingdom, adding 30 million barrels to our 2C resource base. We believe that these 30 million barrels were secured at an attractive price. These discovered oil fields provide us with a resource base for a future field development which will add production and thus further add revenue generating capacity of the group in the medium term. We hope all these events will act as positive value enhancing triggers for all our shareholders.
And that's all we have for this quarterly earnings webcast. Thank you for tuning in.